Why are we seeing a relative measure of calmness in the market, given everything else that is going on?
Ultimately, it's because the market cares way more about the Fed actions than about global macro risks. I mean, we're seeing this over and over again, that the macro environment is not great, but every time the Fed says that we're going to start lowering rates again and be supportive of a global growth environment, the market gets extremely excited. So it's clearly showing that people are much more excited about Fed movement than about the risks in the market.
Is the Fed that powerful?
Absolutely.
Honestly, do they have the ability to supersede with interest rate policy all of that?
I think they are. I mean, this is the most powerful institution in the world. Everything, whether we're looking at bonds, foreign bonds, equities, is all priced based off of what interest rates are doing in the United States. So this is one of the most powerful bodies in the world. And yet, if we do see some of these risks materialize, it is going to really hurt some earnings and credit around the world, which is going to be a negative for the market. So it is very powerful, but that doesn't make it immune to the risks that we see out there.
So do we just hold our nose, hold our breath, and hold on if we're equity investors then, Jay?
I think people need to be aware that there's two kinds of risks in the market right now. There's the known risks that are very well documented. We've talked about slowing global GDP. We've talked about U.S.-China trade wars. We've talked about an earnings recession in the U.S. But what I think worries me more is the unknown risks, because we're starting to see these flare up more and more. The tanker attack today, the protests in Hong Kong, elections, geopolitical tensions. These are not effectively priced into the market because we can't see them coming. And that is what can really derail returns at the end of 2019.
Do you think that we'll end the year higher or lower than we are now, Jay?
Well, I think if we can,
U.S. equities.
U.S. equities. I think we're probably going to be pretty flat from here. I just don't see a ton of upside given current valuations and the earnings recession that we're starting to see.
Is there any place in the world that looks really good to you still at Global X funds?
We're still looking at long-term technological growth, so not looking at kind of broad market indexes, but seeing corners of the market that are attractive, like cloud computing, like robotics. But these are for long-term investors. I think just buying the broad market right now looks less attractive than it has in the last few years.